So let's talk about open-ended fund companies. So what exactly is open-ended fund companies? Open-ended fund company is a special form of company with corporate tax exemption. That means that if you set up an open-ended fund company, you do not pay corporate tax. Or an alternative name for it is profit tax for the company. So what's the purpose of open-ended fund company? Well, first of all, as we have mentioned, open-ended fund companies are corporate tax exempted. And the purpose of setting up such a company is to serve as an investment vehicle to manage investments for the benefits of its shareholders. While for most companies, the primary objective of a company is to do business, open-ended fund companies serve as an investment vehicle to hold investments and manage investments for the benefits of its shareholders. Open-ended fund companies by itself is a form of collective investment schemes. That means that the investors, the shareholders, pull their money together for the sake of making profit in the process of making investments. The standards of open-ended fund companies and its creation standards are set by the Securities and Futures Open-Ended Fund Company Rules. These so-called rules are in fact subsidiary legislations. That means they are a piece of law. And in the future, we would allow overseas corporate funds to redomicile in Hong Kong, basically to move and emigrate into Hong Kong. In my opinion, the primary purpose of allowing these open-ended fund companies to be set up in Hong Kong is to allow local fund managers and local auditors to make money in the fund management industry and fund incorporation and fund admin industry, so that Hong Kong can get a share of the pie from other overseas jurisdictions such as Cayman, Bermuda, Jersey, and Singapore. It would allow us to compete with these jurisdictions. So now we are going to talk about the unique features of an OFC, an open-ended fund company. Okay. First of all, as we mentioned before, it's corporate tax free. That means it is exempted from having corporate tax and having any corporate tax liability. And second of all, just like any other limited company, it has limited liability. That means shareholders only lose what they have invested. They won't have more liabilities beyond what they have invested. The third thing that is quite unique is that they have a variable share capital. That means that they have very few restrictions on transfer compared with other private companies. Their shares being issued are freely transferable with very, very few restrictions. Last but not least, OFC can flexibly accept subscription and redemption and adjust its share capital without shareholders' approval. In normal private companies, when you issued more shares, or if you redeem your shares to decrease the number of shares, you would need shareholder approval. With OFC, you don't need that. Okay? That's why it's uniquely suitable as an investment holding vehicle. Whereas for a normal company, if you use it as an investment holding vehicle, you have to pay corporate tax. And on top of that, if you allow new investors to join, there's a shareholder approval process you have to go through, which is extremely difficult and tedious. Okay? So what kind of powers does the SFC have towards an OFC? First of all, you have to understand running an OFC without SFC registration is a crime. You cannot do it. And therefore, it is very clear that SFC has the power to register an OFC. And it also has the power to cancel the registration of an OFC. And under some special circumstances, the SFC has the power to give direction to an OFC. For example, to not allow the SFC to issue new shares, to stop an OFC from redeeming its shares or transferring its shares. Last but not least, the SFC has the power to make subsidiary legislations and issue codes and guidelines with regards to OFC. So as you can see, SFC, it could be said that the SFC is the primary regulator of OFC companies in addition to the company registry. Okay? So let me give you a very brief overview of the laws and codes that govern OFC. Basically, the main law that governs how OFC operates is what we call Ofc Rules. The full name is Security and Futures Ofc Rules. It is a subsidiary legislation. That means it's a law. If you violate the Ofc rules, there's a possibility, not a certainty, but a possibility that you could go to jail. On top of that, the SFC also issued codes that govern OFC. Codes by itself is not a law. They have no force of law. However, codes can impact the fit and properness of the person being governed. That's why when you violate codes issued by the SFC, such as the OFC codes, they may impact your license, your registration, and the company status as a valid operational OFC. If you violate the codes by itself, there's no possibility that you would go to jail. However, the worst thing that could happen to you is losing the license and losing the registration. That's something you should bear in mind. Codes are not law. So let's talk about the workflow of registering an OFC. The first step is to submit the details of the OFC to the SFC. What kind of details are needed? The company name, the address, directors, the investment managers, and custodians. Once these details are being submitted, the SFC will determine whether to register such an OFC. And if they think it's okay, the registration will be carried out by the company registry. Remember, all the documents and communications will be handled by the SFC. You're not required to contact the company registry. The company registry then needs to maintain a register of the OFC with the specified information of the above, so that the public can tell what the OFC is and the details of the OFC, if it is necessary. So let's talk about the workflow of registering an OFC. The first step is to submit the details of the OFC to the SFC. What kind of details are needed? The company name, the address, directors, the investment managers, and custodians. Once these details are being submitted, the SFC will determine whether to register such an OFC. And if they think it's okay, the registration will be carried out by the company registry. Remember, all the documents and communications will be handled by the SFC. You're not required to contact the company registry. The company registry then needs to maintain a register of the OFC with the specified information of the above, so that the public can tell what the OFC is and the details of the OFC, if it is necessary. So we are going to talk about the share capital of OFCs. Remember, OFCs can have more than one class of shares. Maybe Class A, Class B, Class C, Class D, okay? Shares can have varied voting rights and varied rights to participate in profits. That means different classes of shares have different rights and different proportions to take in profits. Basically, shares capital, the class of share capitals, is defined by the instrument of incorporation. Instrument of incorporation being a set of documents. And the rights to participate in profits for different classes of shares can only be altered according to the instrument of incorporations. Shares of OFCs are mostly transferable with little restrictions. Remember, the keyword here is little, very few restrictions. However, there are still some restriction. It doesn't mean that they can freely transfer their shares without any limitation. That's not true. They have very few restrictions, but they do have restrictions. That's what you need to know. Okay, now we are going to talk about the Register of Shareholders of an OFC. Basically, an OFC is required to keep a register, a book or a database of its shareholders at one of the following places. The most common places, that is, its registered address. So an OFC can keep a register, a book of its shareholders at its registered address. An alternative is to have a place in Hong Kong that has been notified to the registrar, registrar being the company registry, the head of the company registry. The register, basically the book or the database, should be accessible by the following persons: all company shareholders, investment managers of an OFC, the custodian of the OFC, and the SFC. Okay? Resolutions of OFC. Resolution basically means a proposal, a kind of suggestions. If you want a suggestions or proposals to be accepted, you need a certain threshold of shareholders or voting rights to approve such proposal. An ordinary resolution is the most common type of resolution. It is passed by show of hands in a general meeting. That means a real physical meeting by a show of hands. To pass an ordinary resolution, you need more than 50% of voting rights or shareholders' approval in order to pass an ordinary resolution by show of hands in a GM. For special resolution, you need 75%. Last but not least, we have resolution by circulation. That means you do not need to attend the meeting. It's not a physical meeting. In fact, it's just a piece of mail or an electronic message. In order to pass this proposal by sending mail and electronic message, you only need 50%. That's resolution by circulation. So let's talk about the general meeting of an OFC. Basically, the instrument of incorporation document may or may not specify the necessity of an annual general meeting. General meeting is basically where shareholders attend and approve things. Shareholders with 10% or more of voting rights may, in a general meeting, request the director to call for a general meeting. That means if they want to discuss something, if you have 10% or more voting rights, you can propose to the director to call for a general meeting for shareholders to meet up and discuss different matters. And they also have the right to require the inclusion of a proposed resolution at the general meeting. That means they can propose something to be discussed at the general meeting if they have 10% or more of voting rights. The notice period of a general meeting should be not less than 14 days. That means in order to call for a meeting, you have to give your shareholders at least 14 days notice. Or any period defined by the instrument of incorporation. That can be longer than 14 days if it is specified by the instrument of incorporation. Special notices may require a notice period of no less than 28 days. That means it's longer than the normal required notice period. Some things that require more than 14 days may include the removal or appointment of directors of an OFC or the removal of auditor of an OFC. Next in line, we are going to talk about written resolution by circulation. A written resolution can be proposed by the directors of an OFC, shareholders with no less than 5% voting rights, or shareholders with enough voting rights as defined by the instrument of incorporation. Once a written resolution has been passed by circulation, the copy of that written resolution must be provided to all shareholders, auditors, custodians, and investment managers. Okay, let's talk about the legal duties of directors of an OFC. The initial director, the founding directors, will be identified at the time of incorporation of an OFC. If the instrument of incorporation requires a general meeting to be held every year, the director of an OFC will be appointed in the meeting. In other occasions, the directors should be appointed by the directors of the OFCs, which means that they will appoint themselves. Directors of an OFC can be removed by ordinary resolution in a general meeting by a show of hands, 50%. However, the removal of a director requires a special notice. That means a longer notice period of 28 days. The company is required to keep a register, a book, or a database of directors to open inspections to any shareholders of the OFC at no cost, and to other persons at a reasonable fee. So let's talk about some other legal duties of the directors of an OFC. Directors shall disclose their conflict interest to other directors, and if a deal with conflict of interest has been entered into, declarations should be made as soon as possible. So now let's talk about the duties of directors according to the Ofc Code. Remember, the Ofc Code is not a piece of law. It's merely rules and regulations set by the SFC. If you violate this code, you don't go to jail. Okay? Basically, according to the Ofc codes, the directors of an OFC must be of good reputation, be appropriately qualified, and be experienced. An OFC must have at least one independent director that is not a director or employee of the custodian. It must be independent of the custodian. However, directors are not required to be independent of the investment manager. That's something you should bear in mind. They should be independent of the custodian, but not independent of the investment manager. It's not required. You can, but it's not required. The core functions of a director of an OFC is to oversee the activities of the investment managers and the custodian. Basically, act as a check and balance to the investment manager and the custodian. That's the duties of the directors of an OFC. Okay? Next in line, we are going to talk about legal duties of custodians of an OFC. Founding custodians will be identified at the time of incorporations. Subsequent custodians will be appointed by the directors. New appointments must be approved by the SFC before its commencement. If a custodian ceases to act for an OFC, the custodians should make a statement and submit a copy of that statement to the SFC. The statement should state whether they think there's something going wrong with the OFC or if nothing of particular attention is there. I mean, if there's nothing to report to, they can just say they have no reservation or no specific comments. That's what they should file. Next in line, we are going to talk about the legal duties of investment managers of an OFC. Initial investment managers will be identified at the time of incorporation, and new investment managers will be appointed by the directors of the OFC. And once again, new appointments must be approved by the SFC before its commencement. Let's talk about the duties of investment manager according to the Ofc Code. And let me repeat myself, Ofc Code is not law. You should know that. According to this code, basically the investment manager of an OSC must be licensed or registered by the SFC to conduct Type 9 activity, which basically means that no foreign management companies shall be an investment manager of an OFC. An OFC can appoint more than one investment manager. They can have multiple investment managers. The investment managers must maintain adequate records with regards to dealing, accounts, and other activities to explain and reflect its financial positions and operations of the investment manager's activities. And records should be kept for at least 7 years. And the core function of investment managers of an OFC is to manage the investments of the company and act in the benefit and for the benefit of the OFC and its investors. So next in line, let's talk about the legal duties of auditors of an OFC. The founding auditors will be identified at the time of incorporations. New auditors will be appointed by the directors of an OFC, and the auditors of an OFC has the power to access information relevant to its task, such as accounting records, and make inquiry of the directors of the OFC, the staff of the OFC, the custodians of the OFC, and the investment managers of the OFC. Auditors can be removed by an ordinary resolution in a general meeting. However, the removal of an auditor requires special notice. That also means a longer notice period. And if an auditor ceases to act for an OFC, it should make a statement and submit a copy of that statement to the SFC, basically to state whether there are matters that require specific attention or if there's any wrongdoing in an OFC. If there's none, just report there's none. Okay? So what are the duties of auditors according to the Ofc Code? Basically, the most important thing is that they should be independent of the OFC's investment manager, custodians, and directors. So let's talk about the legal requirements of financial statements of an OFC. Directors are required to publish an annual report for each financial year and to provide annual report to shareholders free of charge upon request. Annual report should include the financial statements of the OFC, and on top of that, also the auditor's report on the financial statements. That means the auditor's comments, whether it's true and fair, or if the auditors have any reservation regarding the company. What about the Ofc codes? Are there any requirements regarding financial statements? In fact, there are. Financial statements shall be prepared according to the Hong Kong Financial Reporting Standards, the International Financial Reporting Standards. Audited statements must be disclosed on an annual basis. That means you should make an audited statement every single year within 4 months of the OFC's financial year end. And in those audited statements, you must include specified information such as the investment portfolio, assets, liabilities, revenue, and expenditure. That's required. So what exactly is the scope of the Ofc Code? Basically, they are applicable to all OFC, including both public and private OFC. The difference between private and public OFC is that public OFC is allowed to be sold to the public. However, in order to do so, extra authorization by the SFC is required. Whereas for private OFC, it cannot be sold to the public. It can only be sold to professional investors only. The scope of the Ofc Code is that they govern the following persons, including the OFC itself, the directors of the OFC, investment managers of the OFC, and custodians of the OFCs. These people are called key operators. Once again, I should repeat myself, the legal status of the Ofc Code. Basically, the Ofc Code is not law. There's no possibility of going to jail if you violate the Ofc Code. However, any violation may impact on the fit and properness. The worst outcome to the OFC itself is the cancellation of the OFC registration and fines. And the worst outcome to key operators is the withdrawal of the license, suspension of license, and some fines. So what are the Ofc Code general requirements regarding OFC? Basically, OFC shall act honestly, fairly, and professionally with due skill, care, and diligence, including in the selection, appointment, and ongoing monitoring of any delegates. The scheme's property, that means the company property, should be held by a custodian and properly protected. Operation should be in accordance with the instrument of incorporation, and the OFC must avoid and minimize conflict of interest. If such conflicts are unavoidable, disclosure must be made to investors. Disclosure should be clear, simple, effective, and timely. And an OFC should comply with laws and regulations, work with regulators, and violation of the laws and any serious contravention of the codes should be promptly informed to the SFC as soon as possible. Next in line, we are going to talk about the Ofc naming requirements according to the Ofc Code. Well, applications to the SFC shall be made under the prescribed format regarding an OFC's name. And names of the OFC shall not be misleading and cannot be identical to another existing OFC. And the name of the OFC must end with open-ended fund company or OFCs. So where exactly shall we keep asset of an OFC according to the Ofc Code? Basically, for private OFC, there are two options. Either you find a custodian recognized by the code on unit trust or mutual fund, or you can put the asset in another intermediary conducting type 1 activity. Whereas for public OFC, you can only place asset with a custodian recognized by the code of unit trust and mutual fund. An OFC must approve a custodian to safekeep the assets of the scheme as mentioned before, and the custodian must have adequate and sufficient experience, expertise, and competence in safekeeping and maintaining adequate internal controls and systems to address the relevant custodial risk. Scheme's assets should be segregated from the asset belonging to others. That means trying to be as clear and as remote from other interferences as much as possible. So let's talk about the termination and cancellation of registration of an OFC according to the Ofc Code. Basically, there are two types of termination and cancellation, voluntary and involuntary. Basically, if you want to start and initiate a voluntary termination or cancellation, you don't want to do this OFC business anymore. What you should do is to submit a proposal to the SFC stating that, among other things, that the OFC is solvent, and also provide the reason for termination. What then will happen is that the asset of the OFC of the company will then be realized, and once it's realized, all liabilities will be cleared and the proceeds will be distributed to shareholders. That's what happened. And in other situations or any involuntary termination and cancellation, please follow court order. So let's talk about private OFC's special requirements according to the Ofc Code. Basically, the OFC, the company, shall not be operating as a corporate entity for general commercial business or trade. Otherwise, it would be there is no point in having a regular company. Any company can register as an OFC to avoid taxes. In order to avoid that, we basically need to state that an OFC should not take part in general commercial business or trade. Basically, the primary objective of an OFC is to do investment and manage investments. Instrument of incorporations can only be altered with shareholders' approval, and if alterations impact on shareholders' right, reasonable prior notice of the change must be given to shareholders. That's very similar to other companies as well. Private OFC special requirements according to Ofc Code 2. Instrument of incorporation shall clearly set out the details of its operations, including pricing, dealing, issue, and redemption of shares, valuation, distribution policy, use of leverage, fee, and charges. It shall also include the requirements disclosure of a proper method for the regular valuation of asset of the OFC and the pricing and redemption of its shares. An OFC is required to file its offering documents with the SFC as soon as practicable following its issuance. And if there are any subsequent changes to the offering documents, it must be filed within 7 days of issuing the revised offering documents. If the custodian of an OFC, private OFC, is a type 1 intermediary, it should handle OFC assets according to client security rules, client money rules, and record keeping rules. The custodian may also appoint a sub-custodian as needed, and the custodian should manage custody risk with adequate organizational arrangements. One thing you should bear in mind is that the custodian of a private OFC must be independent of the investment manager. That's something that is very important. It must be independent of the investment manager.
For inquiries regarding HKSI licensing examinations, you are welcome to contact our staff through the following methods. By website, www.ucexam.com. By phone, 211096444. By email, info@ucexam.com. By WhatsApp, 934720644.